right, well, good afternoon, everyone. It's Joe Pochadeniak here with McNichol and Associates Asset Management, and I'd like to welcome you to our latest podcast. Today, we're going to be talking about a topic that I think is extremely important, but doesn't get as much attention from the investment side of the industry, and that's going to be charitable giving. And so today, I've asked two of our experts in this area from the Benefaction Foundation to come in and join us for a discussion, a panel-based discussion on DAFs, donor-advised funds. Now, if you've not heard what a DAF is before, don't worry. You'll be up to speed on that after this session. And so my guests today are going to be Meredith Agnew. Meredith is the Chief Investment Officer of the Benefaction Foundation, and she's joined by her colleague, Jolie Elkins. Jolie is the Director of Granting and Philanthropy at the Benefaction Foundation. And first off, Meredith and Jolie, welcome. So good to see you. Thanks for making the time. I'm sure you're super busy, but I know that our viewers are going to appreciate this. Maybe before we get into kind of the technicals of what a DAF is and philanthropy and that kind of stuff, I'll just point out to everybody that's watching this webinar podcast that we're not providing direct tax advice, even though I have a feeling we're going to get into some of the potential tax benefits associated with charitable giving. Okay, and the reason for that is we don't provide tax advice. It's important to get your own tax advisor on that. And then from an investment perspective, that is something we do here at McNichol, but we're not going to be giving direct investment advice from this podcast to anyone in particular. We do need to speak with you before we make investments on your behalf. So welcome. Meredith, maybe I'll start with yourself, Chief Investment Officer of the Benefaction Foundation. Tell us a little bit about yourself and the work you do at the foundation.
Sure. So my background is actually in the investment industry. Quite a few years ago at various firms. I had different roles. I worked on a money desk back when T-bills were, going for 16%. So a long time ago. And then I was a sales assistant, an investment advisor. I worked then for a private individual, high net worth individual for a number of years. And then I got introduced to Nicola Elkins, who's the founder of Benefaction. I've been here 10 years now. And throughout my time in the investment industry, never heard of a donor advised fund ever. Had no idea what I was getting into, no idea what it was about. And 10 years later, it's a very rewarding experience. For me, it's a lot of it's a kind of a marriage now between investment knowledge that I have and also using some of the industry experience I have to work with advisors. I know kind of the lingo and everything that they want to know, and how to open up an account and all that good stuff. And then the other side of the charitable giving is amazing. As you mentioned before, there's some tax advantages that I'd never heard of before, which are amazing for folks who want to use those as some benefits. Just the granting out to recipient charities is the most rewarding of all, because you're really feeling like you're making a difference out there. So, right. And just the joy that the donors have.
That's great. No, I love what you said, and I was reading your and Jolie's biographies on the website. Very impressive, of course. There's some similarities. So David McNichol, our president, went to Western, and I'm a CFA as well. So I think we're going to get along great. And I really appreciate the point about making a difference. We're going to talk about that. Jolie, maybe tell us a little bit about yourself, as well as the role of granting and philanthropy. How does that all kind of integrate into the picture?
Yeah, sure. Well, I have a bit of a different story from Meredith because Nicola is my mom. We have the same last name. So I have been aware of donor advised funds my whole life, since, we started having these conversations about what she did for work. I started working part-time throughout my undergraduate degree, helping process the grants going out to charities. So I've been in this for longer than I think what's listed on my bio probably.
Excellent.
And independently, volunteer for various charities and have throughout my time. And so that's why my passion in this business is really the granting side of it.
Right.
We talk about, from an advisor perspective, all the benefits of what you might be able to offer a client in terms of tax advantages with something like a donor advised fund.
Right.
But the real purpose of these funds is to be able to give that money away to other charities. And we're very privileged to be able to be a conduit and to be able to build more charitable giving. Mm-hmm. Donor advised funds have grown exponentially over the last decade, and they've surpassed now the number of new private foundations that are being opened up. So donors are really enjoying this method of giving, and
right.
It's creating a lot more dollars in the charitable sector. So my role in granting and philanthropy is focusing on helping our donors with their granting out, so all of the administration and coordination that goes on with that. But also we will support donors who are trying to look for specific charities or get some support in their research efforts.
Right.
And Benefaction as a foundation also gives back through 3 funds, which are our Directors Fund, our Philanthropy Fund, and our Reciprocity Fund. So I also do the due diligence to help support those 3 funds, which we can talk about a little later.
All right, great. Well, it sounds like the two of you, including your wider team, have lots of stuff to keep you busy. So that's always a good thing. So let's get right into it. So, Julie, I want to mention with yourself, and your mother. You probably have a lot more experience having direct touch points on DAFs. I've been in the industry for over 20 years myself, and I must say I'm just sort of, mainly through yourselves and a few other groups, learning about what donor advised funds. But let's sort of open up the discussion. They're basically, if I'm not mistaken, a charitable account that an individual or a family can establish, correct?
Yep. So the way we like to describe them is that they're a charitable investment account where a donor can deposit or donate funds into a separately held account, and then they can withdraw funds or grant them out to registered Canadian charities or other qualified donees. Mm-hmm. So they provide the benefits that you could have with a private foundation with significantly lower costs, and all the administration is obviously taken care of by our team.
I just want to mention with that the charitable account is not owned by the donor. It is owned by the providing DAF provider. So with us, it would be a Benefaction Foundation would be the owner of that account, and the donor is donating then to Benefaction Foundation.
Okay, good. So I think that's a good point. Now, when you're setting these up, once the DAF has been set up, let's talk about kind of maybe more specifically what you can and what you cannot donate to these funds. Obviously, the ideal world is someone shows up at the office in Toronto with a check and your office takes care of the rest. But I think you can also donate securities and even units of privately held companies. Is that correct?
Yes, we have we have a gift acceptance policy, as would every, as I said, DAF provider or every charity, in fact, that could accept gifts. Mm-hmm. So, of course, cash we do accept, but I think our main source of donations is securities, publicly traded securities, due to their tax benefits. You don't have to pay any capital gains on those shares that you've donated, and you get the donation tax credit, which you can use against 75% of your net income, and you can carry it forward 5 years from the date of the donation. So 6 years in total, you can use that to use up the credits for it. So, if you're crystallizing some capital gains one year and you're going to have a big bill, good to make a charitable donation.
Sure.
I should also mention that, of course, there's no winning in charitable giving. You still have to have the charitable intent first and foremost. So if a donor, if that doesn't exist, there's not going to be a gift. So it's not a magic wand and they get more money back. It's still a gift and it still costs the donor.
That's a really good point, Meredith, because remember, you have to want to give. You have to kind of have philanthropy and giving first as your objective. And then, if you're willing to make that commitment, you are going to go ahead and get that tax benefit. You can't come at it first from the perspective of, I have a major tax event that I want to evade, and I'm going to use this charitable strategy to get me out of it. No, that's not the way to think about it, right?
Exactly. I mean, these people are givers probably in their whole life.
Yeah.
They're not usually entering the donor advised fund space as a new donor, although it can happen. We get donors who had large inheritances given to them, or we have one donor I know that won the lottery. So that's unusual. So or a lot of them get money out of an estate. So.
That's the next part I was just going to say is, my dad passed away 4 years ago, and I have a obviously working knowledge of the estate process. How would an estate go about doing this, making that charitable contribution?
So an estate, the executor would have to have the power to donate within the will. Mm-hmm. That has to be added ahead of time. Different clauses. I'm not a lawyer. I don't want to give you the exact clause that would need to be added. Yeah. But as long as they were given all the opportunities within the will to be able to do donations included in any other planning that would be done to try and alleviate some of the tax. We also get a lot of people putting in their will, specifically their donor advised fund. So they would name Benefaction Foundation in their will, and then the money would flow to the will. They could either have successors managing the funds that flow in, or they could have the directors of Benefaction named as the successors, and we would just follow whatever their wishes were, either written in their will, or even easier, just give us your directions that you want after you've passed, which charities you want us to give to over the life of your fund. Go ahead.
I was just going to say, one of the advantages of a donor advised fund is the flexibility you can have with your charitable giving in your will. So when you name charities in your will, if you decide you want to change those charities or the allocations, you need a lawyer involved and you need to redraft your will. Sure. If you're including your donor advised fund in your will, you can make changes to those charities with just a signed letter to your donor advised fund provider, and we can change that in our system. You don't need to be redrafting your whole will. So as your giving changes, as events happen throughout the world that make you want to give differently, you can have that ease with changing the instructions you have with us.
Right. And the other benefit also is since you've gone through it, Joe, the poor executor that is sitting at the table with 12 different charities listed in the will, that's 12 different beneficiaries that they're going to have to update and keep aware of what's going on, and they're going to be calling them when are we getting the money and all that sort of stuff. So when you name you're just one DAF provider, then all of that goes away, and it's just one beneficiary that is going to distribute to the other charities that they would have chosen. So that's a benefit as well.
Sure. So it sounds like the creation, we should probably hit that point as well, but it sounds like DAFs make charitable giving for certain entities a lot easier and a lot more simple. When did DAFs get started? Is there a historical reference point that we can direct our listeners to? Have they always been part of the Income Tax Act, or is this like more of a recent thing?
So, donor advised funds have been around for decades, living within community foundations across Canada. They were introduced, I don't recall when exactly in the United States, but they've been around a long time there. Fidelity Investments was one of the first and the biggest, I think, still in the U.S. Canada, though, started taking off with donor advised funds amongst the investment firm world in 2007, I believe it was introduced the capital gains exemption, which suddenly brought to light an opportunity for the investment world to retain the assets themselves, because when you open up a donor advised fund at a community foundation, they receive the assets.
That's
and
right.
It's leaving McNichol and it's going to the community foundation. No, there's nothing wrong with that. It's
Right.
whatever suits the donor, whatever works for them, their preference. But being able to have your trusted advisor manage the funds in your donor advised fund account is a huge advantage for many donors who just want to work with the same investment team. They don't want to think that somebody else is going to be investing these funds and they don't know what's going on. And, it's easier to make donations in through your investment firm than trying to deal with some outside charity. So it is a lot simpler for that reason
Sure.
as well.
Sure. No, that sounds great. And I mean, again, I think I think most of the people, ourselves, the people watching this, probably are aware of the changes the government made to the capital gains inclusion rate. But that notwithstanding, this has still got to be sort of in your DNA, and from an estate perspective. And I know we just talked about it a moment ago. If this is sort of part of who you are, you do want to have that conversation with your lawyer, ahead of time. And just sort of continue it. So it's like a legacy thing. You lead a life well lived, and then after that you can build out the legacy using the DAF structure and your legal team as advisors. That's really good. I think a lot of our investors are going to really appreciate that. Maybe let's just shift gears now to kind of where. So we understand benefaction. We have a better sense of DAFs, the mechanics around that. When the money goes out, you talked about some of the funds. I noticed from the site you made some pretty material contributions here to the Carleton University nonprofit leadership program. Talk to us a little bit about like how the money goes out, where it goes, how benefaction gives back, what kind of thought process goes around that to ensure you are giving these large sums of money to important causes and making a difference. And then is there sort of like an audit process whereby you maybe revisit monies that you have kind of sent off and donated? Do you check back in on that periodically?
Sure. So I can talk to that. The vast majority of the money that Benefaction gives out to charities is based on recommendations that our donors have made to us. So in 2023, we granted out $56.3 million. Those grants were largely based on our donors saying, I would like to support X, Y, and Z, and we facilitated those grants. Now, we have a grants policy in place, and
good.
we have to approve all of these grants. So donors don't get to give wherever, whenever. But we accept grants for any registered Canadian charity or qualified donee per CRA's guidelines. That giving policy allows us to have, instead of an audit and following up on the money after the fact, that allows us to have the assurance that the money is being used for charitable purposes. Most of our donors also have personal connections with the charities that they give to. Their DAF just becomes the charitable giving tool that they're currently using, but they communicate with those charities independently. They may want to set up a pledge or a scholarship, and they would fund that with money from their donor advised fund, but there's often a personal connection that our donors might have with the charities. The Benefaction Gives Back piece is what Benefaction Foundation has done. Due to our success and growth, we've been able to give back some of the money that we are making in excess of our fees, and we have separated that giving into 3 funds. The Directors Fund allows our board of directors to choose, again, registered Canadian charities or qualified donees that they would wish to make grants out to, and the amount that they get to give is based on how long they've served on our board. Our Philanthropy Fund is meant to promote the philanthropic sector in Canada, specifically in education. So for years we've given to the Canadian Association of Gift Planners, which is an organization that brings together advisors as well as charities to have discussions about charitable giving. And they host a conference every year that we attend and webinars, so we really like to support them in their educational efforts. The Carleton Giving is newer. Carleton has the only masters in philanthropy, so the only masters about this specific field in Canada. And so we've supported them because we want to promote education about the philanthropic sector and help create even more educated individuals participating in our sector. And then our Reciprocity Fund is a newer fund that we established because there are communities in Canada who are severely underfunded by Canadian philanthropy. Canadian philanthropy is most heavily focused often on the healthcare, education, and religion areas. So there are a lot of communities, specifically the Indigenous community, who have been missing out on the machine that is Canadian philanthropy. So the Reciprocity Fund is our effort to acknowledge that. Doesn't mean we're fixing that problem in any capacity, but we also share the way we give back with our donors, hoping to encourage some changes in their giving to make sure these underfunded communities are being served.
Okay, very good, very good. Okay, well, I think we've done a very good job of introducing the concept and kind of talking about individuals. The fact of the matter is many of our investors here at McNichol are business owners, entrepreneurs. They come from sort of that business world. What are the benefits of establishing a donor-advised fund for a corporation?
Go ahead, Meredith. You looked like we were both going to talk at the same time.
Like.
Well, I was just going to say that. No, you go, Meredith. I'll stop.
I was just going to say that we have a lot of business owners who do have donor advised funds with us, and they are very motivated to give in any case, many of them, but there are of course tax advantages to give for corporations. There's the capital gains exemption that they would enjoy, and also corporations are a little bit different because they receive a tax deduction with their donation receipt versus a tax credit that would go to an individual. They also so if they have a holdco, they would get the benefit of those capital gains exemption. They would also be able to reduce the assets in the holdco, which is difficult for some corporations to actually get assets out of there. And they would also be able to add that capital gain to their capital dividend account and be able to withdraw personally whoever would be able to receive a dividend from the corporation. So there's a few different tax, as they say, we're not tax experts. I don't want to get into too many details of it, but suffice it to say it is highly advantageous for business owners with appreciated securities hiding in their holdco to look into that. Now there's some tax changes that happened in June for corporations and the capital gains tax, which I'm sure you're more aware of the ramifications of that than am I, but those caused some limitations to doing that with the capital gains exemption. So, it's still, Canada is still one of the best tax venues for tax savings with charitable giving in the world.
Sure.
So even though they've made it a little bit worse for people in some instances, it's usually only the ultra high net worth that are affected. I'm sure that the accountants will be working hard to eliminate some of the pain that might be felt out there.
Yes, they will. Yeah, no, I've got a lot of good friends who are accountants as well as many investors here at McNichol. So that's great. Again, I think you did a wonderful job, Meredith, of talking about the mechanics and the technical attributes of donating through your corporation. It sounds like tax savings, efficiency are there. But there's also sort of the employee side of it. I think it feels good, and I think it's good from a reputational perspective to be part of a company that has what I call good corporate citizenship, which is to say, take care of your customers, take care of your staff, do good in the community. And so talk to us a little bit about how you see this employee satisfaction side of it from giving, because I think we all get busy with our individual silos of our respective mandates. Some people might not even know how much donating or charitable work their companies do.
Yeah, so I would say we don't always have a window into how the employees are feeling about the donations that their corporations are making. I think it is one of the selling features that we advertise about why a corporation would be interested in this, is it's not only for tax advantages, but again, just like with an individual donor, there has to be that philanthropic motive in the first place, and employees and CEOs and everybody involved in a company is interested in giving back and doing well. I think that's evidenced in all of the corporate social responsibility changes that we're seeing across all industries. So a DAF is just kind of an easy way for corporations to do that. It removes the administration and the additional work that might be put on another employee or somebody within the company to make this an external project.
Some corporations who do have the employee matching programs and things like that are very beneficial, and I think those are a lot of feel-good things that the employees have. We partner with a company called Benefaction, another charity, and through that there's a lot of employers across Canada who donations through Benefaction, either in-kind securities as well as just cash donations where employees can deposit, and then how we see them is it's coming to us to go into a donor advised fund. However, they're able to do that through Benefaction and send funds out to direct to other charities as well. So, operating charities, unlike us. So there's a lot of that going on. So we get Benefaction donations every month. Some people give, $50, every couple weeks, so every paycheck. So it's, sometimes we have a lot of memorial funds where that's of interest, where friends and family who might work at a corporation that does that would then give into the memorial fund, on an ongoing basis or even just one time.
Right.
But yeah, definitely corporations do have a lot of programs like that, and people are using them.
Yeah, and I mean that's a good point too. Is you do what you can with the means that you have. One other thing on the corporation side, just maybe going back to tax, not to be too on the technical side, but when you sell a business And in some industry groups that I follow for the company, there is an elevated level of business sale activity. Usually, if it's been a business that's been around for a while and successful, there is quite a hefty tax bill that can be associated with that. If I understand correctly, you can actually offload part of that through donations. Is that correct?
Yes, absolutely. We got people who've had sales of businesses and give some portion to donor advised fund. Many of the business owners, as you say, they're so busy winding up the business, getting bids on it, organizing it, and all of that. And with a lot of businesses in Canada, they don't have successors necessarily, so they are selling them, to other individuals, not family. If they would have liked to give it to family, perhaps, but there may not be anyone to hand it over to. So there is a lot of movement in that space, and we do get portions of sales of businesses. But as I say, since they're so busy, it's a very simple solution is to just give some money to your donor advised fund, out of that, and then they can think about what charities they want to give it to, later, or just have it be a legacy for a long period of time and have a long time because some of them are huge donations, right? And they don't necessarily, and they may not be people who gave
Right.
ever before. It's just somebody has suggested it to them, and they immediately think it's a great idea and want to give back, but they don't know where. So
Sure.
it gives them the opportunity to extend that period of time of when they can choose which charities they want to support and make meaningful, choices for
Right.
them.
Building on what Meredith said, we don't require granting in the year of a fund's inception. So if you have a taxable event and you make your donation and you get your tax receipt, you don't necessarily have to have chosen where the money is going to right away.
Got it. Okay.
In subsequent years, we require all of our donor advised funds to give out 5% based on the fund's asset value, which is calculated with the previous quarters. So the first few years, it's a little lower than what 5% really would be.
Okay.
And that's your required disbursement every year. So again, as Meredith's saying, this can be, for especially those really big donations, have a huge legacy component, because as the assets grow over time, you're only required to give that 5%. One thing also to just segue there is donor advised funds are sometimes criticized for being a holding of assets that, would otherwise be going out to charities. But our disbursement quota in 2023 was 16.9%. So we were well above the CRA requirement. Most of our donors are giving out much more than that 5%. That's just the requirement that we meet.
Okay, that's interesting. I never thought of it that way. The fact that you might be subject, not you personally, but that the DAFs could have that criticism levied against them. And it's kind of like a private equity fund with a gating provision. The gates are not there to be difficult or to separate, investors from their monies. It's in fact to, make a more orderly redemption process available, such that the investor can actually rely upon it conclusively. Meredith, I want to just sort of yank out something, and not to be confrontational, but I just kind of want to mix it up a bit, because ultimately, you made a great point. A lot of this is good. A lot of this makes sense in a lot of areas, but the fact of the matter is you're giving away money, and it's got to be in your nature to give. Have you ever had conversations with groups or individuals or businesses that have been a little bit more challenging to kind of get to that point where all of the technical stuff is very black and white, but there's a reluctance on the part of an individual or individuals to actually part ways with money? This is basically what it amounts to.
I mean, for us, that's not really our domain normally. It's usually the investment advisor that's having the hardest conversation, which is
Sure.
why we're partnering with people who have to talk through giving up the money. They've already decided to give up the money once they're talking to us. Of course, we do talk to donors. Donors call us without an investment advisor as well. But people who are reaching out to us, they want to give away money. So, we don't really have a lot of people. We do have people who may not want to give that 5%,
Yeah.
and that conversation is just, you have to. We don't have, like, some DAF providers do have granting holidays, what they call them, and our mandate is to give to charity. Like, that's one of our number one purposes for being here. So we're not in the business of wanting to keep money back. Like, for instance, we don't have any cap on granting, whereas other providers do. So if somebody puts in $1 million and they want to send out $500,000, 2 weeks later, we allow for that. Whereas a lot of providers say, no, you have to keep it here for another year or whatnot. So we're very flexible in our policy for granting. So people actually, do like it, but we also are very stringent on you have to give. So there are people that we have to struggle to collect on their grant recommendation. We have those difficult conversations with some of them, but
Sure.
They come around. And some people, we used to have a minimum grant of $1,000 when I started, and there was this gentleman who had a donor advised fund, and he was like, that's crazy. How can I don't want to give $1,000. Like, that's a big amount of money. And, and then he started doing it, and he would give me grants that he wanted to give. And he ended up just so excited to give. And, he was so happy with it. He was granting $1,000 here, there, everywhere. Whereas it took a bit of time to kind of get out of the mindset of, but I only give $50 a year to this charity. Like, now you have this pot of money, you have to give it away. So it's very good for the charities receiving that, they're getting the money, it's not sitting in their pocket. And also the donors, when it's not their money in that account, they're not writing the check themselves. They get a lot more generous with the money once it's sitting in there, because it's not coming out of their bank account.
Right.
And they get rolling with the excitement of giving and hearing back from the charities about
Right.
the impact that they're making, and so it's very infectious for them. And anyway, that one gentleman, he sticks in my mind because he was a bit of a haggler, but anyway, he was very excited about it in the end.
All good, Meredith. I'm sure that gentleman is a good man and well intentioned. A lot of the people that we manage money for here, have a very strong background in insurance. I believe the way you do this is you can make a donation through your insurance policy, but benefaction would have to be named in the insurance policy. Is that a fact?
So we could be a beneficiary of someone's insurance policy, which is, just simple. Put Benefaction Foundation
Right.
with their, we would know who they were, and it would come to us after they pass. Then there's, if they want us to be the owner of the policy, then we would have to, and they want us to have a new policy with Benefaction as the owner. And often, most times, the donor would then pay the premiums for the policy. So they would give us a check for the premium amount or securities. So either way, and pay those premiums. We would pay them on their behalf every year, on our own behalf, because we're the owner of the policy. And then when the donor passes away, the funds would flow into their donor advised fund. So there's that, and then they can also assign an existing policy with us. Now, there is criteria for all the policies that we would accept. We don't just accept anything. We would have, evaluated for a bunch of different criteria, whether we would approve it or not before we would sign off, we would do that. And but those are the three different ways.
Okay.
There is
Shall
also
Lisa?
a new, for your insurance
Oh, yes.
experts who might be listening, Canada Life has a new product called My Par Gift, and it's a new life insurance policy product meant for this charitable giving concept, where the donor pays a single premium and a charity is named the owner and beneficiary of the policy, and the donor receives the receipt, and then the charity has the flexibility to receive the tax-free death benefit when the insured person passes, or access to the cash value during the lifetime of the donor, or a combination of both. So this method is helpful for donors who want to make a one-time tax receipt eligible donation that can still grow over time.
Right.
So that's a new one for any insurance buffs to investigate.
Very good. Very good information. Okay, so we're coming up to the top of the hour, and maybe we can just sort of round it off with some final points here. And one of the things I know, we manage a lot of money, but I can admire someone for being frugal. I don't think that's a knock. And Meredith, to your friend with the $1,000 that just was sort of like, I can't get my mind around this, but. What can you tell us about the minimums amounts for setting up a DAF? Is there a minimum? When you're thinking about this, kind of what should you have? Because there's sort of everybody's got the minimum, and then what is the sort of it actually makes sense to do this? And then talk to everyone about some of the fees and expenses that they should be aware of when going down this path, because there must be fees somewhere.
Minimum donor advised fund has to be an initial donation of $25,000. So we have lots of people who are $25,000. That's fine. Some people do $25,000. They give us a little test drive, and then make more donations over time. Lots of people top up, what we call a top up donation,
Sure.
Annually or every other year, whenever they have some sort of tax event. Then they would continue to donate. So it may start at 25, could go up, a lot or a little each year. It doesn't matter to us. You get a tax receipt for $50 or and up after you've established the fund with us.
Mm-hmm.
So that's the minimum there. As I said before, we lowered our grant minimum to $250 after I tried to get 1,000, but with a $25,000 fund, it's quite difficult to
Sure.
give away to the charities that they want to for $1,000. So
Yeah.
I can understand that. So our minimum didn't really match the granting minimum. So we did change that. Fees are based. Well, I should say that there's no limit on the amount of money you can give to us. So. And then
We didn't think there was, Meredith. We certainly.
never know.
No one's accusing you of saying there's an upper limit.
Yeah, no, exactly. There is a upper limit on our fees, however. So
Right.
fees,
Okay. Well, that I want to hear. So yeah, let's have that.
So fees, we have two types of fees, which is a little bit unusual in our space.
Right.
But we have a donation fee, which
Okay.
is applied to every donation made into the fund. That applies to any donation they made into the fund, whether it's in the initial donation, they make a donation the following year, 10 years from now. And it's based on a scale, so it's 1% up to $1 million.
Mm-hmm.
From 1 to 2 million, it's 0.5%, and 2 million to 3 million, it's 0.35%, and then above that, it's negotiable. It does top out at $10,000 for any one-time donation. So I think that is around 7.5 million or something like that. It would top out at. So if you gave 10 million, it would just be 10,000. So and it would be based on accumulated donations. So we would add them up. And once you cross over one of the levels,
Yeah.
it would be lowered to the lowest level that it could be for that amount. Then we have an annual administration fee, which is also kind of tiered in the same manner. It's 0.5% on the first $1 million. Sorry, this is based on assets in the account. So it's 0.5% up to 1 million on the first million. Second million is 0.35%, and the third million and up would be 0.15%. So it's kind of a blended rate for those folks who are in the higher asset values. But that's essentially, it's charged in arrears, and we charge it quarterly.
I would just point out to anybody listening to make sure you do the due diligence on which DAF provider you're looking for. These are our minimums and our fees, but every provider across the country is different. I know the Toronto Foundation is a community foundation that does donor advised funds, and they have started a program to initiate much smaller funds, so up to 5,000. But everybody's fees will be different, so making sure you're checking in on those and asking those questions is important.
No, that's a great point. That's a great point. And I think it's also important to just sort of, for everyone watching, obviously to separate the admin fees from the money management fees. Those are two separate discussion points. If you're hiring a portfolio manager or an investment advisor, there's sort of a different discussion to be had about those fees. So that's really great. Well, I have to say, I really, as I was preparing for this discussion, I really, kind of got excited about it because, this is one of those areas that I think, again, that there's a lot of kind of tax and mechanical benefits to doing it, but it's also, this is important, right? Like, this is important that people do this, and if you have the means, it's important to kind of, I want to say spread the wealth. That's sort of a cheeky term, but I think this objective that you have in philanthropy in general are really important. So Meredith and Jolie, I want to thank you both very much for your time today. I know you're extremely busy, and I do want to thank my colleague Ken Reed for getting this podcast together. Any closing comments that you'd like to share?
I would say anybody who's interested in a donor advised fund, go and ask those questions. Our inbox is ready. We're happy to field any of those. I think even if a donor sets up a donor advised fund from a taxable event and they maybe haven't been as philanthropic in the past, the legacy and ability to help component is this, incredible thing that even though we're a charitable giving vehicle and, we're being used in a financial product way, this is something that is really important to donors. And so for all the advisors out there, I also recommend that you're having these conversations with your clients if you're not already, regardless of if a donor advised fund is the right option for them. Sure. It allows you to have a much more personal connection with your clients.
Yeah. That's really good. It's like part of that financial life cycle approach to helping your investors. That's really great. Really great. Okay, wonderful. Well, thank you again.